Hi everyone, it's Jack Bauer in the video. Today I'm going to be talking about Chevron stock, an oil major. It's a very well known business, $334 billion market cap as of today, trading at a PE on a trailing basis of under 10. It's a dividend aristocrat with a 3.5% yield. Warren Buffett has around a 10% position in the company as of right now, with about $33 billion stake in the business that he built up over 2021 and 2022 and is still holding. It's been a fantastic run for the business over the last couple of years as oil prices have surged. As they're coming down, it remains to be seen what will happen with this business and whether it can still provide oil on a profitable basis. However, right now and recently, its cash flow has been flowing. Recently had some news about its buybacks and dividend program that's really interesting. I just want to evaluate whether I think this stock is a buy, sell or a hold right now for the long term. Chevron, which already has a large and illustrious history of returning cash to shareholders in the form of dividends mainly, but also in share buybacks, which I'll talk about in a minute, has decided to triple its budget for share buybacks to $75 billion, much higher than what Exxon announced a few days afterwards. And this drew some ire from Wall Street mainly because a lot of investors are going to be pretty happy about this. You think for a company like Chevron, there's only so many ways to use the massive amounts of excess cash they've generated from the high oil prices. One will be paying down debt. They don't have a ton of debt compared to some rivals, for example. Also, the second option will be to invest in renewable resources because obviously oil industry isn't going to be around forever. The tide is very much turning on this. So investing in renewable resources is certainly one use of it, and that is kind of what the White House wanted them to do, to be investing in renewable resources and infrastructure. From a shareholder point of view, I'm not sure that's what everyone wants out of Chevron as a business. I think everyone knows now when they're investing in oil companies that this is going to be a dramatically different business in 20 or 30 years when the majority of cars are EVs or likely to be EVs. So I think for sure returning cash to shareholders is a completely viable option, and $75 billion in buybacks is about 20% of the business as it stands. If the share price goes down, which it likely will as oil prices drop, that's going to be an even larger percentage of the business, which is absolutely going to be tremendous returns for shareholders based upon this. Chevron has returned cash to shareholders or surplus cash through share repurchases 15 out of the last 19 years. It's around $65 billion in repurchases, and they're going to effectively repeat this over the next few years, which is really, really impressive to me. Average of $95 per share over this period, which obviously won't have been a great price at certain times, but the price is $173 now, so it's a long-term mindset. They've done pretty well there in my opinion. But again, the scale of this is dramatically high, around $11 billion this year. In 2021, it's something like $2 billion. In the next few years, it's going to be $75 billion. That's fantastic. Q4 and full year earnings were rightly overshadowed by this massive share buyback announcement. Earnings per share was about where it was supposed to be, $3.33 on a per diluted share, $4.09 on an adjusted basis, $18.28 and $18.33 for the year. That's about where they're supposed to be. Just earnings $36.5 billion for the year. That's really strong. $49.6 billion of cash flow from operations. Dividends paid $11 billion of dividends. Share repurchases a further $11.3 billion and $3.75 billion for the quarter. So a clear ramp up towards the end of the year. And a debt ratio of just 12.8%. This business is firing all cylinders and is arguably at the peak of the cycle. Another big initiative management announced is they want to make this a more capital and cost efficient business and they're targeting reduction of unit OPEX of a greater than 10% by 2026. This is effectively going to increase earnings per share because it'll increase removing expenses, increases cash flow, increases earnings, which is only positive for the shareholders. They see this as going to be quite a dramatic reduction, 17 billion per year. They want to see as their guidance. 2010 to 2014 average was over 30 billion. 2015 to 2019 average was over 20 billion. So this would be a significant reduction. The business is also going to be investing in renewable solutions and trying to lower its carbon output. Of course, it's quite hard for an oil and gas company, but they've recently purchased Renewable Energy Group, which is a biodiesel company. They're trying to reduce their carbon footprint, but nevertheless, the focus of this business is going to be an oil and gas business, and the main focus, by the looks of it, is returning capital to shareholders and making this a very capital efficient business. They believe they have an advantage portfolio, unmatched financial strength in this sector, which really their only real peer is ExxonMobil. Capital and cost discipline they're looking for to increase this in the future, and they believe that all this will provide superior distribution to shareholders. And this seems like it's all they're really focusing on. The lower carbon solutions is very much on the back burner to returning the cash they're making in the heyday to shareholders, which I think is a novel way of looking at this. I've spoken a lot about buybacks, but Chevron is also a fantastic income play. It's a dividend aristocrat with 35 years of consecutive dividend growth, currently with a 3.56% forward dividend yield, at just a 30% payout ratio, and a 5-year average growth rate of 5.6%. Over the last 5 years, there have been a couple of years where the payout ratio has gone over 100% because, of course, oil and gas is a cyclical industry, and it's continued to pay and increase its dividend in those years, showing that this is really a priority for this company, and it will surely be a dividend king in the future, in my opinion. So we've established for a medium-term holding, Chevron is a pretty good income investment and is returning capital to shareholders at an excellent rate. Now it's really only a question of valuation. On a price-earnings basis, it is much, much lower than the S&P 500 average right now. S&P 500 average is around 19, as you can see on the right-hand side. Chevron is currently trading at a price-earnings on a trailing basis of around 9, price of cash flow of around 6.6 versus the index is 14, and a price to book of around 2 versus the index is 3.6. Now, of course, oil and gas is a cyclical industry. These are trailing numbers. Whether it's going to be the same next year, almost certainly not. Oil and gas prices are coming down, and while things can change, the war in Ukraine, who knows what's going to happen? Almost certainly the war in Ukraine is going to end eventually, and oil prices will return to normal over time. And this is not good for Chevron. It will affect their cash flows, and they will come down to more of their average numbers. I don't believe now is a particularly good time to buy Chevron because they're we're just seeing the top of the cycle and we're still at very high oil and gas prices. I don't believe Chevron can hold these sort of numbers in the next few years. I think that will just result in a drop in the share price. However, with the amount of shares they're going to be repurchasing and continuing as a dividend play, this will be a fine income play. I think generally, as it has done for the many, many years, it will be the market. So personally, it's just not a stock I can invest in at this time, at this price, because I kind of think you're paying at the top of the cycle. That's the only real negative I have on this company is its valuation right now. I think while its valuation looks very cheap, if we look at analyst estimates for next year, they're not very pretty, and I think there could be a significant reduction in this stock's price. However, Warren Buffett is still holding, so who am I? What is my opinion versus the best investor of all times? However, for me, it's just not the right investment right now. Perhaps for an income play, it has 3.5% dividend yield and has increased every year. It could be a fine investment from that point of view. I just think there's some short-term volatility potential. However, over the long term, it's beat the market. I don't see any reason why it wouldn't over the next 5 to 10 years, given its track record. However, do I think oil and gas is going to be an excellent company, an excellent investment strategy in 30 years? Maybe not, as we move to more renewable energy sources. Of course, this is just my opinion. Just let me know what you think in the comments down below. Let me know whether you think Chevron is a buy, sell, or a hold for the next 0 to 10 years. Whatever you think, let me know down in the comments below. Like and subscribe and enjoy the video. Remember, I'm not a financial advisor, so do your own research and due diligence. Don't buy or sell stocks just because I say so. Look them up yourself. Do your own research. Like and subscribe. I'll see you again next time.